What's going on, everyone? Bryant here. Today is Tuesday, October 20th, 2020. I'm recording this video as the market is closed, and what we're going to be looking at is a case study on a beautiful setup today in Facebook. I'm also going to show you guys what criteria you can look for to know when a stock should be in play for the day before a big move happens. Now, if you see my previous video, I highlighted a very simple and effective day trading strategy, which is when the 9 EMA crosses over VWAP during the morning session. But more importantly, I told you guys you want to look for stocks that gap up, especially if they gap up over a previous day's resistance level, and if it pushes through it during the opening drive. If you haven't seen that previous video, I highly encourage you guys check it out because it explains exactly why this strategy is so effective. I left out something very important in that video because I always had the intention to introduce something that I use in trading that's very effective. It's called the Anchored VWAP. It's something I learned about earlier this year, around January or February, from Brian Shannon. I was watching an SMB Capital video, and if you guys don't know who SMB Capital is, I highly encourage you guys check out their YouTube channel. It's one of the top proprietary trading firms in New York City, and they have a very excellent YouTube channel. I owe a lot of my playbook style of trading to Mike, who is one of the co-founders over there. And I was watching one of the recap videos of one of their traders, and he mentioned the Anchored VWAP. And then from there, I went in and I started researching Brian Shannon, and I just absorbed a lot of that guy's information. The Anchored VWAP works like VWAP, and if you don't know, VWAP stands for Volume Weighted Moving Average. Now the thing is, VWAP is updating every day, and it only takes into account the volume and the price action for that current day. The Anchored VWAP allows you to pick a specific point in time to get a VWAP that's accounting for all of the volume that has traded from the specific time in which you choose. Now, if that sounds a little bit confusing, let me just show you what it looks like on TradingView. Here we have Facebook in TradingView, and we're looking at the daily time frame. Unlike before, we were looking at the intraday time frame, but this tool right here is what's called the Anchored VWAP on TradingView. And again, different platforms. I've used the TC2000, I've used TradingView, I've also used TrendSpider. TrendSpider was one of the ones that made it very easy and popular to use. But clicking this right here, I can then click any candlestick and it would create a VWAP, but that's anchored from this particular day. So it's going to calculate all of the volume that's been traded from the candlestick in which I'm choosing. You can then click it and drag it to get an anchor, say for example from up here, and it's going to show a VWAP, again, that's accounting for all of the volume that's been trading from this origin point. If we just zoom out, I can pull the Anchored VWAP to call it from this just before this gap up day. We can move it up here to this gap up day. Again, this video isn't about Anchored VWAP in itself. I'm going to do a separate video on that, but in case you want to know more, I highly encourage you guys to check out some of Brian Shannon's content, and I'll link him down in the description below. Generally, you want to look for a swing high or a swing low. You also want to look for when sentiment changes for whatever stock or futures or whatever instrument in which you're trading. So you can put multiple VWAPs on a chart. So say for example, you want to see what has been going on since this candlestick right here, because that's when the selling essentially stopped, and we can kind of see we have an Anchored VWAP that's been holding price up from there. Again, this is not a breakdown on the Anchored VWAP. I just wanted to bring it to you guys' attention. So let's just delete that and let's jump to the intraday time frame on Facebook. Right here we have the 3-minute time frame, and this is just showing yesterday and today, the day before. But now, why the Anchored VWAP is so important to me is because, as you guys know, I focus largely on reading price action, and reading price action goes in tandem with understanding what's going on with volume. The Anchored VWAP is the perfect culmination of two of those things, and that's why it's super important to me. Now, I do use VWAP when I'm trading intraday, but I don't rely on it as much as I rely on my Anchored VWAPs. So earlier this year, building upon the information, again, that's already out there, Brian Shannon could be considered the father of the Anchored VWAP, and the EMA crossover VWAP is not something I created myself either. However, I didn't find any information on what I call the 2-day Anchored VWAP, and it's essentially just anchoring the VWAP from the previous day's open and letting it ride out into the next day. Why this would be important is because 2 is a very powerful number. If you guys never thought about it, 2 is the smallest number with the largest multiplying effect. Think about that for a second. The number 2 is the smallest number you can have that's going to return the largest results. In that case, I don't want too much information for this strategy. I only want to get an idea for what is the average price of the participants from the previous day. That way I know if a price gaps up over the previous day's anchored VWAP, I'm reading that as a change in sentiment. In the previous video, I mentioned that if a stock has been downtrending and then it gaps up, that's when you want to look for this sort of EMA VWAP crossover. Now, when you get a stock that gaps up over its 2-day, that makes it an even higher probability trade, but not only for an opening drive scalp, it also becomes a trade that has potential to trend the whole day. Sometimes the 2-day anchored VWAP will be tested multiple times. So now that you guys have seen it in TradingView, let's just switch back over to Thinkorswim. Now that we're back in Thinkorswim, we're just going to load up this style set that I created. And here we have it. I'll put a link to this study in the description below if you do use Thinkorswim. Again, it might not be as accurate because it is something that I kind of hacked together using information that was already online. If you want something you can definitely trust, I would encourage you guys look into, again, TradingView as well as TrendSpider or TC2000. Those are 3 other excellent charting softwares. But in Thinkorswim, this also works this does work pretty effectively. And I realized if you use any type of anchored VWAP in Thinkorswim, again, the link will be in the description below, and you change the time frame to just 1 day, Thinkorswim is going to inherently show you yesterday's price action as well as today, and then it's only going to account for that volume. Therefore, it becomes a 2-day anchored VWAP. This is something that I created earlier this year, and I can tell you it has changed my trading tremendously. So what caught my attention today is the fact that Facebook had gapped up and it pushed across the 2-day anchored VWAP. Let's look at the rest of the tech stocks. Here we have FANG, and if you guys don't know, FANG is referred to as Facebook, Apple, Amazon, Netflix, and Google. FAANG. And I threw Microsoft in here, and what we have over here is the Qs and then the NASDAQ futures down here. You guys can ignore the ADD and the tick for now and the VIX. These are just some very popular market internal reading indicators. So at a glance, what you guys should notice is here's Apple. Here's the open was below the 2-day anchored VWAP. What do we have on Amazon? It was below the 2-day anchored VWAP. Netflix was below it. Google was below it. Microsoft was below it at the open. And the NASDAQ was also below it. Even the NASDAQ futures were below it. However, Facebook was over it. Do you guys see that? That right there can let you know what stock you want to have in play, because sometimes it can be overwhelming deciding what stock to trade. Now, just focusing in on Facebook, if I turn the pre-market data on for a second, you guys can see you can use the 2-day anchored VWAP with pre-market data turned on, but as you guys know, I also don't like to do that because that volume from the overnight session will affect your VWAPs. I like to have my VWAP only accounting for the volume that's happening intraday, and not accounting for the after hours and pre-market sessions. I just wanted to point that out to you guys because if we look at the other stocks like Apple, say for example, with the pre-market data turned on, you guys can see even from pre-market it was well below its 2-day anchored VWAP, and that in itself is when you're scanning from 8:30 or 9 a.m. or even if you start your day at 9 a.m. Eastern time before the bell at 9:30 and you're trying to decide what stock should be in play. That's one way you can weed out which stocks not to pay attention to. So we go back to Facebook. The next thing I'm going to do from there is you want to check the news. If I pull up the news, let's just pull up right here. We see at before the market opened at we see at 8:26 there was a maintained buy, raises price target to 320 on Facebook. At 8:32 we had a maintain outperform on Facebook, raise a price target raise, we had another price target raise, and so forth. So there was some catalyst, there was some news that was coming out pre-market, and that was helping Facebook. Let's hide the news for a second and let's turn off the pre-market session. Now focusing on actually how do you necessarily trade this? Once the bell opens and you see we push past this, you guys know I'm not an opening drive scalper. I do like to wait for a setup to come into play. Let me actually just put my EMA back on this chart. All right, and there we have it. Here's the setup in itself. Again, straight from the previous video, let a stock drive up during the opening and put in its high of day. Once it puts in the high of day, I draw out my Fibonacci's and I wait for some sort of a 50% retracement in confluence with this VWAP EMA crossover. Now, I showed you guys in the previous video, if you don't want to use any type of indicators, that's fair, because even if you're just looking at price action, you would see that this is a good area to buy. Check out the previous video for my reasoning as to why. If you're looking at the 5-minute time frame, I use the 3-minute time frame with pre-market data turn on or off. This is where I found the strategy to be most effective, and I can accredit that to Mike over from TTG. He's actually the one that made me start using the 3-minute time frame as opposed to the 1 or the 5. But here we have our confluence, we have our cross, we have our 50% retracement. The 50% retracement is something that I trade. I know a lot of other traders like the 23 or some like the 38. As you guys can see, I don't even have the 38 on. I use the 50% retracement. My back testing that should just show that to be the most effective to catch any type of a momentum based trade. Now, when we get this much confluence in an area, it's a great area to go long, to ride this momentum. You can use the negative 23.6 and a negative 61.8 as your profit targets. That's something that I do use a lot. Or you guys know, if you're looking to ride it for an all-day trend, you can use the 9 EMA, a breakdown below this, as your stop loss, because you don't know if the stock is going to continue trending. Now, the important thing to point out here is what we have is the 50% retracement was also in confluence with the 2-day anchor later in the day, and this whole area became a buy zone for Facebook. Now, if you're watching this video in the future and you're not aware of what's happening right now, we have the market has been extremely choppy and volatile the past week or so, because we have elections coming up in a couple weeks. We have a political stalemate over the agreement off of the next stimulus package. The market has been extra sensitive and reacting to every headline, mostly probably because of the algorithms that are programmed to buy or sell around the news based on the stimulus. So if I just pull up the Qs, so pulling up the Qs on this larger time frame, we can see that the Nasdaq has been selling off, and yesterday and if we just go to actually a daily time frame, we'll see that this is the type of market in which we're dealing with. We've had 1, 2 on the Nasdaq. This is actually a red day, so we'll call it 1, 2, 3, 4, 5, 6 red days in the Nasdaq, and you'll see it better again in the future. So I'll pull that up for you guys just to confirm. Here we go. 1, 2, 3, 4, 5, 6 red days on the Nasdaq. That is unprecedented. Even as we tanked back here, this is only 1, 2, 3. Again, it was a bigger drop, but to see this many red days on the Nasdaq is something that's unprecedented. I think the last time we had that many red days, I know 4 days, I think was last summer, if I remember correctly, was the last time this happened. But it's not normal for this to be happening. So I wanted to point this out. This is not really a good sign for tech. So coming into the day, if we drag back over all our large cap tech stocks, that's the reason why we had so much selling. So I came into the day looking for something that's gapping over the 2-day. I actually had a very successful trade in Google. I'm not going to talk about that in this video, because now I want to get to, because I really want to focus back in on Facebook. So let's just jump back to Facebook on the daily, because I do want to show you guys what this looks like. We have this nice uptrend that has been forming right here since we put in this bottom essentially. Let's go back to it intraday, and here is that trend line, and you guys can see, so we also gapped up over that trend line from the daily time frame. Let's clean up this chart for a second, and hopefully you guys can see this is the trend line here. So it was a gap up over a trend line from a daily time frame in confluence with this 2-day anchored. And man, you guys probably know how much I mentioned confluence on this channel. The more confluence, the more better, because the more confidence you're going to feel. So think of that. The more confidence you find, the more confidence you will be in the trades in which you take. Now, because I was in a trade in Google, I didn't want to put too much risk in tech. So I did lay off of this trade, and I was happy with the trade in which I caught in Google. I'm showing this one to you guys because it is a continuation of my previous video, so you guys can see how powerful this setup is. Now, this level here, you can also You can also look at your fibs from the previous day's low to the swing high of the day, because the opening drive trade is a different setup, and you guys can see this is the 50% retracement from this level. So this whole area becomes a buy from multiple perspectives. I'm not going to show you guys multiple time frames and things like that. There's different reasons for why, depending on the time frame, the chart in which you're looking at, to see, you know, different entries. I'm showing you guys how I look at the charts, as well as how I use this proprietary approach to find confluence while reading price action to take certain trades. I'm gonna let's hide the Fibonacci one more time, and I just want to show you guys this on a 5-minute time frame, because I did mention that it is important to look at things on the 5-minute time frame if you're going to adopt looking at the 3-minute, just because the 3-minute time frame is not the most common one. Most traders are looking at the 5-minute time frame, and it is important to check that out to see, you know, certain candlestick formations as well as wicks and so forth. So just wanted you guys to see that in case you don't trade off of the 3-minute, as well as let me hide this from you guys, because I don't use the 9 EMA on my 5-minute time frame. I like to look at very clean price action for that, and here's what that looks like. Now lastly, let's talk about some options, because it's actually how most of you would probably want to take a trade like this. So we have one entry here at 950, and then the next time to take a long entry would have been, you know, 1105 or 1135 in that area. So let's drag over the options. On the left hand side, I have the 270 strike, and on the right hand side I have the 275. Why these two strikes? Let's take a look at the options chain. Here we have it. Here's the 270, and of course at this time it was not in the money, it was out the money. I liked the open interest on it, as well as the volume at the time. Again, I'm sorry, I don't have a screenshot from early in the day, so I can't show you what the volume was actually at that point, but I can tell you that the open interest was pretty much this high, but the 275 had even higher open interest, and these contracts were much cheaper. They ended up going in the money after hours, and we'll take a look at that briefly, why that happened. And let's take a look at, if you guys are more conservative and don't play the same week expirations, we'll take a look at the 275 for next week. As you guys can see, these contracts were a lot more expensive. The open interest was decent, the volume was okay, but I'll show you guys why I did not like those contracts. So we were looking at the 270s and the 275s, and let's put them up on a chart. Here we have it right here. So we said for the first entry, the trade kind of initiated when the VWAP cross happened, when the EMA VWAP cross happened, which was around 950. So we have right here. So these contracts at this point are going for $1.80, and on that push up, that's call it a 40% move. I'm not going to say anyone's going to catch the exact top, but if you did, that was a 47% move. So about 85 cents, 80 cents in premium, which is great. You're talking about, for a contract this cheap, you could get, you know, even with a small account, 2 to 3 contracts, and this is a high probability trade. And on the left hand side, we have the 275. We have the 275s, which are even further out the money, which means these contracts would have been even cheaper, and we have at 950. These contracts are going for 75 cents. All the way up for 56% return. So we have $1.18 if you caught the top, but assuming you got out in this area here, that's still a 47% return. So about 35 cents gained in premium. And at here, for 70 something cents, you could have gotten, you know, call it 4 of them. It's not large. That's not large size. If you don't know with options, you just multiply this by 100, and that's how much it's going to cost you. So now if we go back to Facebook itself and we look at the next entry for this type of trade, we're talking about between 10.11 and 10.35. Let's take a look at the options. We have this double bottom that's happening here. Now options love to lose premium as they're consolidating, as well as any pullbacks, and they love to double bottom or triple bottom sometimes. Whenever you see that on an option, guys, and you see an A+ setup on the underlying, take this trade. I'm telling you, I've seen this happen. Your risk is so low. If you're in here, you can risk off of, you know, the previous day's low on the option if you want. Obviously, you shouldn't be trading the option chart. You're supposed to be paying attention to the underlying that you're actually trading. So I'm not encouraging you guys trading off of the option chart, but it's just something to point out. Whenever you see these triple bottoms on the option, it means these things are not losing any more premium. So from here, if you take this trade, as you can see, let's just zoom out what happened from here as Facebook continued to run up. That was 150% gain on that option, and on the cheaper one, we're talking about 230% gain on this. And let's take a look at Facebook. And if you're using the EMA as why you're in the trade and you're taking your profit target at higher day, I mean, there's multiple ways to break down this trade. You might be looking to exit here because you don't know if it's going to double top and roll over, but once it breaks back over, you see this much conviction, as well as you can see volume coming in. There's reasons here to be in this trade. Taking a look at one more option, as I mentioned, I was going to point out to you guys, here would be the 275 for next week Friday. As you guys can see, this is a lot more spotty. There's less liquidity here. It would have been a safer contract because there's more time on this one, but at the same time, when you see this little bit of liquidity, it means there's a lot of slippage, so you might have trouble getting fills, especially if you're trading on something like Thinkorswim. You're not going to get the exact entry in which you like, but this trade in itself, you know, this trade in itself is the one I like to take later in the day. So the morning drive trade, you generally will want to play the same day expiration because things are going to be very liquid and the price will be moving very quickly. But then after that, if you want to set yourself up for a position intraday swing, you can go with the following week expiration, so you don't have to worry about pullbacks crushing your premium that much. And from here, we're talking about a 40% return. So these contracts are obviously going to cost a little bit more. So this is going to cost you $550 for one contract if you got it in this zone here, and you're getting about a 40% return on this. But again, the reason I'm looking at the following week expiration, sometimes I do like comparing both contracts, and I journal it and I take notes. So when future scenarios play out, I already have some sort of an idea for what type of contract, what type of expiration I'm going to want to play. The first thing I'm looking for is the open interest as well as the volume. Then I do pull it up on the chart just to get an idea of how the option has been moving. You generally want to see this type of price action, especially if you're scalping whenever you're trading your options. So to conclude this video, let's actually turn pre-market data on one last time. And I'm going to just draw out this trend line also from yesterday using the pre-market lows. You guys can see how there's more confluence in this area. Guys, I can't stress it enough. The more confidence you can find, the more reasons you can find to be in the trade, the more confident you're going to feel in the trade. And when you start scaling up, the more size you're going to be able to take. I want to draw out again our pre-market highs, just so you guys can see how that compares, because I know a lot of you do use pre-market information. You can't use pre-market information whenever you're looking for this EMA VWAP crossover though, but I'm just showing this to you guys. So moving along, let's look at what happened after hours. This pop happened because right now we're in earnings season. Netflix reported earnings after hours today, as well as Snap. And Snap had a huge earnings beat. And usually whenever Snap runs on earnings, Facebook does run also. They're similar platforms. They're in the social media space. They both make money off of advertising. We have a lot of news. We've been having a lot of news headlines with TikTok. Facebook released Reels. Advertising on Snap has been going well, and so forth. So Facebook has moved on the sentiment of Snap. So Facebook is definitely going to be on play tomorrow. And as you guys can see, we put in a high of 276.66. The contracts in which we were looking at earlier in the day was the 270s and the 275s. At this point early in the day, I did not think these contracts were going to go in the money after hours. I would have definitely been in those for a swing, but I will admit I was not paying much attention to Snap's earnings. I was more focused on Netflix. And what did Netflix do? They missed on earnings. So of course, I actually was part of this price action after hours. I was trading shares around here. Again, small size, guys. It was just 10 shares. I was just trying to scalp to see if I can get a little bit of some action here. But then later I did shift focus to Snap. So in recap, let's just turn this off one more time. And here we have our pre-market level. Do you guys see this? We have our trend line again with pre-market information turned on. The chart will look different depending on if you have that on or off. But here goes our pre-market high. I just drew that in. Do you guys see how this lines up here? How much confluence there is? And then it comes back to this area here. Why this whole area is a buy. In addition to the fact that Facebook was holding up so well today, when the entire tech sector was struggling. The Qs came all the way back down and retested yesterday's lows. We had Microsoft broke previous day's lows. Apple almost came close to yesterday's lows. Facebook was still holding this uptrend, not only from its yesterday's lows into pre-market levels, but this trend line is from the daily. We'll close on that. Make it nice and thick for you guys there. Let's go check out Facebook on the daily. and you guys can see that's what was holding Facebook up today also. Earnings is next week, so best believe I will have a sharp eye out on Facebook for more possible momentum trades. Potentially, who knows, maybe retest all-time highs. Hopefully you guys like this video. Leave a comment down below. Check out my previous video on the 9 EMA VWAP crossover, because that was a little bit more in depth on just that strategy. This one was more so about adding the anchored VWAP into the setup, because not all gap ups or gap ups are treated equally. If something gaps up over the 2-day anchor, then you know it's really going to be in play. That's something that I created as one of my criteria for if I'm going to trade a stock. I don't know if anyone else has that same idea. If you guys find anybody online, or you guys know of anybody else that uses a similar philosophy, please leave a comment down below. I'd love to hear from you guys. I've already gotten some great comments on previous videos, and you guys have shared other traders that I didn't know about that have similar trading styles as I do, but I would love to hear from you guys. So leave a comment down below, like the video, don't forget to share, and I'll catch you guys on the next one. Later.